I'm Matt Bichard with REIT.com. Joining me for this episode of Fundamentally Speaking is Calvin Schnure, NAREIT's Vice President of Research and Industry Information. So Calvin, let's talk a little bit about the commercial lending market, which is starting to show signs of activity for the first time since before the crisis. What are you seeing in terms of areas where we're seeing increases?
You know, Matt, we've actually seen a significant turnaround just in the past couple of months, for the first time since the crisis. One of the easiest ways to see this is to look at the Fed's senior loan officer survey that came out very recently. And it showed almost half of banks are reporting increases in demand for commercial mortgages. Now, that's not saying that they're seeing a lot of strong demand, but we're seeing widespread increases in demand for commercial lending. The actual volumes are picking up quite a bit as well. If you look at the banking balance sheet data, a few months ago they were barely positive. They had been running off through last year. You were seeing barely positive increases. Over the past 3 months, it's increasing at about a 4.25% annual rate. Again, not a really strong number, but the degree of acceleration is consistent with a lot of other signs we've seen on the real side of activity. The market's improving. Put that together with what's going on in the CMBS market. Now, the CMBS market has been fairly strong for quite a while. It's been ahead of the rest of the market in recovering. There were some false starts early in the recovery with CMBS 1.0, 2.0, and so on, all of the numbers. But what we're seeing right now is issuance at about twice of last year's pace. We're already about equal to where we were for all of last year. So we're seeing both the demand for loans from the people who are doing transactions, some development, construction and development lending as well as the supply of credit that's really supporting the real recovery in the sector. It's a sign that we are beginning to see the foundation for a real sustained recovery in commercial real estate.
And what about REIT activity in the debt markets?
Well, surprisingly, the REITs have slowed quite a bit over the past couple of months. REITs had fairly strong issuance of debt in the first and second quarters, but in June and July, they were about half the pace of what they had been the previous 3 months. Now, part of this is linked to what's going on in the equity markets. We know that the REIT shares sold off a fair amount when the stock market, together with the overall stock market, they sold off in response to some of the discussion about possible Fed tapering, because the REITs pay a very good dividend. The REITs have a very strong income yield. So people who are looking at fixed income have also been paying attention to what's going on with the REITs. Now, it's important to keep in mind that REITs are not fixed income, that they are going to benefit from the overall recovery in the commercial property markets, and that means that their rents are going to rise, their incomes are going to rise. We're expecting recovery in the REIT equity market. Now, you say, how does that affect the debt market? Well, when they're able to issue equity, when their equity prices are strong, they're able to use those proceeds for acquisitions, and they finance those in part with debt. So you put those together, a bit of a sell-off in the equity market. We're having a temporary lull in the REIT activity there, so they don't need the financing right now.
And with all that being said, what's the outlook for the commercial mortgage markets as well as commercial real estate overall?
We're seeing continuing disappointingly slow recovery, but it's less disappointing as we go along. The macroeconomy is showing a bit more strength. We've had still mixed news. The employment report for July showed that job growth was a bit weaker, but we're seeing stronger signs of overall GDP growth. We're seeing quite a good improvement in the housing market. The consumer sector is holding in there fairly well. Corporate earnings overall. You're seeing a good picture for a recovery in the macroeconomy. That means that people are going to need more space for the businesses. We're seeing some improvement in commercial real estate markets. The multifamily market is the real exception. That has been outstanding for quite a while. People have been wondering if it would suffer when the housing market recovered. We haven't seen that. In fact, multifamily is continuing to do well, which is not surprising because there's so many people who are doubled up in apartments or with their parents or things like that. So multifamily continues to be strong, and we're seeing the office and retail beginning to come along with the stronger economy.
Calvin, I know you keep an eye on this on a daily basis. Thanks for keeping us updated.
Thanks. Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.